Good morning, traders. Welcome to the TMT Stock Market Strategy video for Tuesday, May 23rd. All right, traders, so we had a 3-day retracement rally back up, almost filling the gap. We'll probably do so today. We did mention yesterday that we are into a seasonal time that we have the markets actually rally this week going into the big holiday weekend here in the United States. Memorial Day weekend kind of kicks off the summer here in the United States. And that's what we're getting. We're getting a very low volume rally that's retracing back pretty much all of last Wednesday's sell-off. Does it mean that the markets are out of the woods? Absolutely not. I do believe that we are in a process that last Wednesday was very key and critical to the markets. And the stock market is just basically clueless. They have no, they meaning, the crowd has no idea of what's to come. I'm showing this to you because I'm telling you this, and I will get on my soapbox every day. I am not telling you to go out and short the market right now because it is not the time. Technically speaking, we do not have any sell signals, okay? But we are chopping around. Volatility is picking up and will pick up. We might get to the point that we are at the 25.50 in our target in EES. That could absolutely happen. But we could also get a little further up into that zone of maybe even 24.20. 24.25 and fail. That could absolutely happen and be truncated fifth. But we are on our fifth wave. How far does it go before the market rolls over? No one knows. We need more evidence. So I said this week, discount what's going on this week. Next week's going to be a pretty big week, an exciting week for the markets as we come to and conclude the end of May. We also have mutual fund inflows. We'll see if this market can have any legs and push this market higher. If we take out the high of the markets right now and all of the indices, then I believe that we are headed to make new all-time highs and get that ridiculous valuations in the markets where everybody's buying stocks again and pushing this market higher, and the shorts come in and squeeze this market higher to help the bullish case. Once that is concluded and happens, the market will probably fail and start to roll over. And we're looking at right now sometime August through October, the markets will start to roll over. As we get into the summer months, the doldrums will probably just run around and go sideways, chop around in certain areas, and then start to look to move higher yet again. What you see in front of you is the yield curve. And this, I am not, and let me just make a point here, I am not a bond guy, but I do follow bonds as a technician and a trader. You need to know what's going on with bonds as well as you need with gold, consumer staples, because these are the safe haven plays where money is parked until any unforeseen circumstances, uncertainty in the marketplace. This yield curve is flattening and dropping even harder. Okay, this is something that the bond markets are telling us that, hey, be careful out there because there's something going on, something bigger brewing. That are in the cards here. So I think there's going to be a big risk off event, if you will, in the marketplace. The bond guys are the smartest traders in the world, guys. This is the biggest market, and you can't actually just push this off to the side. All right. So for those of you who are managing longer-term accounts, swing trades, long-term investments, believe me, when you have the VIX down at all-time lows and the VIX continues to be shorted, I'm telling you, you will see a major spike in the VIX. That is not the time to buy protection. Now is the time to buy protection when everybody feels good about the market. Okay, so absolutely pay attention to what's going on with the bonds. Bonds are telling us something totally different than what equities are telling us. Okay, let's get right to the charts. ES daily, you can see here 2397, 2400. That's going to be your bigger picture target. We are looking at the bigger picture, 25.50. Again, it does not have to get there, guys. We can rally up into the zone, okay, and then fail, and then just fail miserably, okay. As I mentioned to you last week, remember, one candle took out pretty much 15, 16 trading days, filled the gap, and now we're going higher to fill this gap. Okay, once these gaps are completed, now we need to see where we go, and it's very important. So one candle here, if we had 3 of these candles, you'd wipe out probably 5 months worth of consolidation here in the ES. Okay, we are still on sell signals in MACD and RSI. The damage has been done. And that's another reason why I think that this is just corrective at the moment until we see more evidence that we break above 2400 and then we can hold there. Then I would say that we are now on our move higher. Okay, not until then. Next is going to be the NQ. Same thing, right? We had a big move down lower. We fill the gap here. We're basically filling the gap. We'll probably do so today because we are up a little bit in the pre-market. MACD, RSI still on sell signals, guys. They're 56.29, 57.16. These are your zones for today's trade. Okay. Crude oil. We also talked about crude oil. How I believe this is corrective. We had 16 plus on the rig counts from Friday. Baker Hughes rig counts on Friday. Today's going to be the API number. Let's watch what API number comes out. And then, of course, tomorrow's the Department of Energy. Let's look at the distillates and gasoline. But you can see, to me, this is corrective. OPEC members and non-OPEC producing nations talking their book up because why? They need at least $50 to $52 to even break even. Let's see if we get a lower high, maybe right up in here. Easy to manage. Your short's going to be above that for a retracement right back down to this zone area here. I do believe that crude oil moves lower. Okay. Now, if you have war that's out there in the Middle East, then obviously that's going to be a different story. You should put a war premium into crude oil, but I do believe that we would still head back down again. All right. We are on buy signals now. We had turned higher, so we are on buy signals in crude oil, at least for the retracement rally to make a lower high from this previous high. Now, gold is actually looking quite nice. You can see here, big symmetrical triangle. We're not quite into the apex yet. That would put us somewhere in July, which currently in our seasonality trend puts gold into a really good spot all the way up until September or early October, where I think we can really move higher. Now, if we get more uncertainty and some fear, gold will really catch a bid and start to rally. I believe we're on a second stage bull market in gold. But it still needs to prove itself, okay? 1204 is that line in the sand. We lose that, we break down from the symmetrical triangle to really retest this area here, and then we would reevaluate. But you can see the momentum indicators here are very, very weak. Even though we're on buy signals, it's not to be trusted. Now, the other reason is GDX. GDX, we also have a symmetrical triangle. Here's our slanted neckline, and here's the lower trend line area of support. 2119, write that down. That's going to be the line in the sand for GDX. But GDX needs to start going. It is not moving. And it's not really doing much of anything for the last 6-7 trading days. I'd like to see this get above the 2506 and ultimately the 2580. If it takes out 2580, then I think we have something there. Once GDX starts to move, gold will really start to move. Okay, GDX moves first before gold does. Next is bonds. Really same thing. 155 is really the spot above on a closing basis to get long for the gap fill area, and then we would reevaluate it. Okay, we are on buy signals as well in the ZB. TLT had a better day than that's the ETF. But I am looking for a break above the 200 on a closing basis. That's going to be the 124.33. We get above that area and we get above 124.80. We'll look for a 2 to 3 point rally, then get that gap fill, and then again we will reevaluate. I'm really liking a TLT, but it needs a little bit more work here. Okay. Next is going to be our indexes. You can see our spiders here, 240.08, 240.48. That's going to be the bigger move higher. Again, retracing. Look at the volume, low volume. We are on sell signals. RSI just crossed over the other day, but we're still on sell signal in MACD. Very, very subdued. I believe this is still corrective until otherwise. Okay. Spiders. There's the transports also telling us, giving us a red flag as well as bonds. You can see we just had a very weak. We're still under the 21 EMA. The 200 held as it should. 158. 28 is going to be that line in the sand here. And then, of course, 158.94. If we lose that, look at the volume profiles. We talk about that gap. Here's that big area that'll flush down. Again, will help the bearish case. So watch the transports. For those of you who are managing your own money, IRAs, 401ks, or even any managed money managers that are just blindly just throwing you into mutual funds long, be very careful here, guys. This is something that you need to pay attention to. Okay, it is your money. Don't let the pundits tell you what to do. If the time is right that we need to get out, this is the area. Okay, we are descending here of lower lows and lower highs here. This is not a good sign. Eventually, all these red flags will catch up. Remember, the stock's clueless. I mean, it's totally just clueless here. All right, for what's to come. That doesn't mean I'm telling you to short the market, or I would. I would not short the market at the moment either, because we have dip buyers come in, say buy the dip, go up, buy the dip, go up. But what's happening? We're making lower lows and lower highs here. We're on sell signals in MACD, sell signals in RSI. So there's nothing really great about the market here, especially being overvalued. That's a really big concern of mine. The next is going to be our secondary leader, which is the IWM. IWM didn't even fill the gap. Okay, we only have one or two of the indices that are moving things along. We still underneath the 21 EMA, still within our TMT proprietary price channels. 134.74, 130.94 is the bigger area picture. Again, the thin zone. I think ultimately we flush right back down to the 61.8% retracement and then some. All right, we got a bunch of big gap areas here. We got a gap here and a gap here highlighted in blue. That's something that we need to pay attention to as well. But with the transports moving lower, really not moving at all, Russell not moving, bonds and our yield curve flattening, that's a really big sign. And that's telling me that the smart money guys, the bigger picture, the smart money that really are managing big time money, is nervous and probably looking to execute and sell some of their long trades going into any big rally here. And that's why I believe the markets are not done going down, because the markets are not long enough, because a lot of these managed money fund managers and mutual fund managers are so long in the tooth they need to get out. Okay, and with also, and please keep this in mind, with also the retail crowd investing in ETFs themselves, there's going to be no bids. Because why? Because the retail crowd does not get out of their stock. They just buy, and they buy lower until they're wiped out and they get a call. Once they get their margin call, it's over. The game is over for them. So that's why I think it's going to be more serious this time when it does happen. I don't know when it's going to happen. All I know is that I see a lot of big red flags. In the meantime, as day traders, you look to buy a spot or you look to short a spot, during the course of the trading day until that happens. And then when the market does turn around, or we are confirmed that we're moving higher for that target, you get aggressive on one side or the other. Until then, right now, we're just chopping around the upper end of the range here. So just be selective in your trades, right? Okay, guys, have a great day, and we'll see you tomorrow. Take care.